Oh, hello there, Bill. Someone told me you quit your job at the bank, and now you're a farmer.
That's right, CEAZOR. I'm a farmer.
A farmer? What do you know about farming? You're a banker.
Well, I take care of options at the farm.
Well, I don't know what you mean. What are you talking about? Options? This doesn't make sense to me.
It's very simple, CEAZOR. I sell contracts to people to buy wheat in the future if the price goes to a certain place.
Oh, okay. That doesn't really sound like you're a farmer. Sounds like you're still a banker. Hello, welcome to CEAZOR's Snack Sandwich. Today we're on Complify, taking a look at two new features they have out. Now, this is a sponsored video from the Creator DAO, and if you would like to get some marketing videos such as this for your protocol, you can check out the Creator DAO link in the description below. Now, before I get into these two new features, I want to talk about, I did make a video a little while ago here, about a month ago, called Complify 5x ups and downs, and I talk about the 5x up and down token, so forth, how to trade it and so forth. However, I do the invest token or the invest session, or like providing liquidity, an injustice in this video. So if you do watch this video, keep that in mind, that I don't really cover the invest very well. I made kind of mistakes. I wasn't informed enough when I made this video, and that's my fault, and I'm sorry about that. But anyhow, let's move on. So today I'm going to talk about these two new features, and one is the farms and the other is the options and so forth. So let's get into it. So first of all, what is an option? In very, very layman's terms, you buy a contract saying that if the price goes to a certain place, then I will buy the token or the asset at the price that I originally made the contract. You'll get an understanding of what's going on here as I go through and just kind of explain the general idea of what's going on. Now, as you can see, it all says call, and there are no puts. So right now on Complify, you can only bet on the price going up. Now, they're thinking about putting puts as well. However, because of the way this protocol is set up, it requires people to actually put liquidity into the pools, so it's going to force people to, like, it's just not many people are buying puts on crypto right now because crypto's in a crazy bull run, kind of. Anyhow, so there's no real likelihood that there's going to be a lot of puts in here, but there is a call option. So let's go quickly through this and just kind of understand what's going on. So let's say we had an APY, and the spot price here says $14.62. So that's the price of one option on APY, just one unit of APY option. So like the contract, the piece of paper basically costs $14 worth of APY. So if I come here and I put, say, one APY, you can see one APY is worth $408. So I would end up buying 19.63. Now you wonder, well, maybe you do some math in your head and you're a super genius and you can find out that that doesn't actually match up. As you can see, there is a price impact here. So the actual cost of the option is $20 because right now the liquidity pool for this options pool is not very deep and the price impact is quite high. Or there's some other factors, like maybe, you know, most of the people have bought in a lot of up options. Everybody's bullish, so everyone's buying the call options and the price impact keeps going up. So as people drained the call option pool, the price impact goes up and up and up. So now that doesn't mean like you're going to be down this money, but if APY 2x's, then you're not going to be down. You're going to be in the money. You're going to make lots of money. So the next thing you need to kind of understand is you need to open up the chart and take a look at this. So here is the current price of APY, right? And here is the strike price. This is the price that you're betting. In most option platforms, you're allowed to select the strike price. You're not to adjust the strike price to your desire, and by doing so, you will change the cost of your options. However, here they set the price based at the start of the maturity, the time, right? So here you have August, and it's going to mature on September 1st. So when they make this market, they set the the call option price above that. I'm not exactly sure how they do it. You can read the docs and try to find out, maybe go to the Discord and find out exactly why they set the strike price at this high and this price. So basically, if you were to buy the option right now, you would want the price to raise to 475. You would be betting that the price raised to 475, and then every little bit after that you would be in profit. Okay, so that's basically it. Okay, that's basically about buying an option. You just, you pay this $1, it's gone, it goes to the liquidity provider. However, you get 19 tokens, and if it goes above 475, these tokens will be worth some money. Okay, so you get the idea, right? So let's go over to Invest and talk a little bit about Invest. Invest is providing liquidity. Now I'm going to talk about options again and not the 5x. I did that in another video very badly, but I did it so. And in here, it's very similar. Okay, so you're going to basically decide to provide liquidity to these people, and they are going to buy the options from you. But instead of trying to explain it here, I'm going to swing over to this chart here and show you this Medium article. I would suggest you come in here and read this full Medium article, and you will get a pretty good understanding what's going on. But I'm just going to use these charts because they're very good at illustrating what's going on. If you are providing liquidity, which means you are using this Invest and you've chosen one of these to provide liquidity, there are three possible outcomes for you. One is that you provide liquidity as the blue, right, at the current price, and people buy some options off you, and you get some of that extra, dollars. Remember, I showed you on the UI that I used one APY, and all that one APY is basically put on top here. So it's profit for me, right? And then let's say the price goes down for APY, and nobody can exercise their options because the price went down, and I'm still going to get to this profit, this upside. Now my pool, my entire position will be worth less money because APY went down, not because I was in this position, right? So it's basically like holding the token, however, getting some trading fees on top of it, right? They're not really trading fees, but they're the option cost, right? That's one possible outcome. Now, the second possible outcome is, let's say I'm holding the token and the token goes up in value. However, it doesn't cross the strike price. So with APY, it doesn't go above 475. Then I'm just basically gaining the upside and getting trading fees. This is the ideal situation for people who are providing liquidity. So if you're providing liquidity, check out the strike price and decide if, hey, do I think APY is going to go above that number in the time frame of the options liquidity pool? Like, so in this case, it was September 1st, right? I think I can show you here. Yeah, so September 1st is the expiration date. So if you think is not going to go above that, you can consider putting this in here. Now, the pool APYs are not shown because this is brand new, but it all depends on like trading. Do people come and buy these options or not? Now, the last case, which is probably the worst situation for the person who provided liquidity, but it's not so bad anyways. So let's say I put some options here, and the options are this asset, this APY token went up in value. So I got my upside. Then I also got the trading fees, just like this situation here. But however, let's say it crosses the strike price. As you can see, the strike price is right here. It crossed the strike price, and I still get some options. I still get some trading fees on top of that, but I have to start paying out. And as it goes up, it's basically going to drain my take away from my tokens, but the value, I will always remain that same value. Like, I will have a quantity less of APY tokens because I have to give them to the people who bought these options. So it's kind of like, if you can think of it like dollar cost averaging out, or taking profit at some point at the strike price. So you look at the strike price and you say, hey, if ETH or APY crosses that point, then I want to take profits. And then you're going to take profits. Also, you're going to get some option costs as well, some trading fees on top of that. So it's kind of like taking profit at the strike price and getting some trading fees on top of that. So it's a pretty good option, I think, but you are going to lose if this went like, parabolic, and in like a couple of days, it went like just enormously up. You're basically giving up all that upside to those option traders, okay? So that's something you need to consider if you're going to decide to provide to these or not. So that pretty much covers options in a general overview, right? You're gonna look deeper. If you want to be an options trader or you want to provide liquidity, come and read this article, go to the Discord, ask some questions and so forth. But let's move on. So the next thing is farms. So if we click on farms here, you can see I do have some positions in farms. They are basically allowing any user of Complify to farm their governance token. Now, the first thing I will mention is you can see the next unlock is on this 4 months from now. So 2/3 of the amount that you are earning is locked and one is unlocked immediately. So I could claim these rewards, but I couldn't claim these rewards yet. Now, let's go through some of these possible farms. So this farm here is for the people who provide liquidity to the ETH 5x up and 5x down. Okay. Now, again, if you don't know what this means, watch that other video and you can decide whether or not you want to provide liquidity to that and farm this 25% APY. I think it's pretty safe because you put USDC in, you earn USDC. It's just looking at the price of ETH. This is not holding ETH tokens. There's no ETH tokens in here. It's just pure USDC. Now, another option is you can buy ETH ups and you can farm this APY, or you can buy ETH downs and you can farm this APY. Now, as you can see, I'm doing both. Why would I want to do both? Because I'm hedging. I've got, I don't know, I've got 800 tokens of ups and 800 tokens of downs. So whatever way the market goes, this will go up in value and this will go down in value, but they will cancel each other out. They will hedge each other out. So I'm basically just farming, 14,400 and 14,600 or 700 APY in Comfy tokens just into my wallet kind of. I can claim them, but some are locked as so. So they have all these ups and downs ready for you. And you can decide which one, if you want to use any of them, you want to farm any of them. But then they also have these call options, which again, they have these pretty high APYs. So if you buy this like call option from the market, then you can stick your call option here. And you can, if you provide liquidity for the call options, you can stick that LP here. And you can farm these tokens, these Comfy tokens here. Now, there is one disclaimer right now. There are no markets for the Comfy token on Matic. So if you do want to sell these tokens, you're going to have to bridge them back to Ethereum to sell them. But that's something you need to consider. Okay, so I'm pretty sure that they're going to open markets soon enough on Matic. But just a disclaimer, at the current time, this is what you're going to have to do. Okay, so I think this is pretty safe, up and down. I don't see any major risk. Of course, there is contract risk, there is that. But this is not a new protocol. It was running on Ethereum, but the cost of gas made it not so friendly. So they decided to shift it over to Matic and restart it. So they have been building up a presence on Matic in that sense. So TVL is only about 9 million right now. So they're hoping to increase this. So check it out and consider what you want to do and if you like this protocol at all. So thanks so much for watching and goodbye.